Hey everyone, welcome to Alpha Insights. I'm Martin.
And I'm Lucy. We've got a lot to dig into today, especially in the real estate sector.
Absolutely. It seems like deal flow and financing really took center stage on January 12th. What are your thoughts on that?
Right. We saw major acquisitions and some solid loan closings, which definitely shows that capital is still flowing into areas like retail and life sciences.
And let's not forget self-storage. Those sectors seem to be staying strong, but it looks like we have some headwinds too, right?
Exactly. While the deals are flowing, there's a report indicating that about 24 million Americans are looking at higher health insurance costs. That's a significant impact.
Yeah, the expiration of those enhanced ACA subsidies is a big deal. It's going to squeeze disposable income, which could ultimately affect housing market dynamics.
Definitely. Less spending power could mean lower affordability for buying homes, especially for middle income buyers.
And on top of that, there's local transfer taxes like Los Angeles Measure ULA, which are reshaping the economics of high-end transactions.
It's interesting to see how those local policies are making high dollar deals more expensive. Over $1 billion raised just from that measure just emphasizes how much friction there is.
Right. It's a tough environment for high-end transactions, but it sounds like there's still some solid activity happening in commercial real estate.
Absolutely. For instance, QXO raised about $1.8 billion, boosting their total to $3 billion, which shows institutional interest in the building products market.
That's really intriguing. It seems like they're gearing up for aggressive expansion in such a fragmented sector. It's always compelling to watch how capital flows.
Right. And speaking of capital flow, Tishman Speyer and Belco Capital closed a refinancing deal worth $465 million for the Torrey Heights campus.
That's a significant financing move. It illustrates how lenders are still backing larger, stabilized assets, particularly in life sciences.
Yes, and it's a reflection of how cash flow resilience is keeping lenders interested, regardless of the rising interest rates.
But let's not lose sight of the risks. Rising local policies and household costs pose meaningful questions for future demand.
Very true. It's a balancing act. Investors need to keep an eye on those consumer metrics and how rising health costs might squeeze household savings.
This brings us to the bottom line. Transaction and financing activity is still strong, especially in certain stable sectors like grocery-anchored retail and self-storage.
Exactly. Investors should focus on quality, cash flowing assets while being selective about exposure to discretionary residential markets.
Is there anything in particular we should be monitoring closely?
Sure, keep an eye on capital deployment by private equity platforms, lending appetites for new financings, and any changes in consumer spending patterns due to ACA impacts.
Great points, Lucy. So, in summary, while the real estate market shows strong capital activity, headwinds from health costs and local policies could still impact residential demand.
Exactly, and understanding these dynamics will be key for anyone involved in real estate investments moving forward.
Thank you all for tuning into Alpha Insights. We appreciate your time and insights.
Until next time, keep an eye on the trends and happy investing.